Hello, this is Wes Bridel, and this is another Kingdom Calling economic update. And I am going to be doing the video 3 of a 5-part series I'm shooting here today. And each one of these videos is a short update of what's been going on in the economy over the last couple weeks. If you haven't seen the Coming Storm video, I highly recommend you watch that because it gives you the big picture of what's happening and how you need to prepare. We're in some incredibly different times in what you've experienced in your life, and if you're not prepared, it's going to be just totally overwhelming. So if you haven't seen that, go and watch that for free. That's really important. This is just some quick information, but important stuff of what's been going on in the last couple weeks. I'm going to focus on signs that hyperinflation could be coming. And jumping right in, the Treasury prices broke down through an important level. So this is huge because we've been talking about this for a year and a half or so. Now we're actually seeing where Treasuries, where for 30 years interest rates were going down, 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 Treasury prices have now bumped up enough that they've broken through an important level of resistance, which is a sign that basically that 30-year bull run market is over and that we're now in a different way. The interest rates are moving up now instead of down. So it's a really important indicator for you to be aware of. If you can think of the 1970s, that was kind of the end of early 80s, the end of that last long market of increasing interest rates. We've since then been in lowering and lowering interest rates, but now things have turned around quite decisively. Now the EPA has revoked the clean water permits for coal miners in Appalachia. It's totally ridiculous. So energy costs will be going higher because they're taking away our source of energy. The ECB, or European Central Bank, allows Ireland, this was amazing, they allowed Ireland to print their own money, the Irish Central Bank. So Ireland uses euros, and Ireland has no right or authority to use euros. That there's a very strict treaty, kind of like the United States has a constitution. They have a treaty that sets up the euro and what's allowed and what's not allowed. And this is totally against that, but the Central Bank of Europe just allowed Ireland to go print a bunch of money. What was the number? 51 billion euros. This is preposterous. I can't believe more people aren't screaming and yelling about this. Chinese president called for an end to the US dollar as a world reserve currency, and here just last week, a famous Chinese economist says that China should drop the government-sponsored entity debt that they own. It was an estimate about 500 billion. And that's Fannie Mae, Freddie Mac, that type stuff. If they took up that advice, that would be devastating to the United States if they were to sell $500 billion all of a sudden. I think they're being a lot more sly about it. I don't think they're going to all of a sudden sell $500 million. It would be interesting because there is a theory that the first one to sell is the winner because he gets out before, while the getting's good. But what China's been doing for at least a year is they haven't been adding. They always have new money that we send to them. But instead of adding to their debt, they're buying other things, which is reducing the amount of the US dollar, of the impact on their overall holdings. So I would guess they'll continue that. But, the first moment they see signs of danger, everyone's going to try to be the first one out of the door, and that's when it gets ugly. Citibank about to put excess reserves to work. So there's a lot of people that are really hardcore deflationists, and then what they say is it doesn't matter how much money's been printed because there's no velocity, and therefore the overall money supply, if you look at M2 or M3 money supply, is actually going down because although there's more money printed, M1, there's not more money through the system because it's not being lent out again. So Citibank has announced they're actually going to put their money to work. Again, if you see about $1 trillion start working its way through the system real soon, that could be a dangerous sign. There's another sign I've been watching that a lot of money could start pumping through the American system. Something like that happens and hyperinflation could be here real quick. Spain, Portugal, and Belgium now avoiding the bond markets. So the market won't buy their bonds anymore. So now they're doing backroom deals. They're syndicating their debt. It's a crazy world. China having problems with bond issuance. So again, all the bonds, I mentioned earlier, maybe it wasn't clear, but the U.S. government's having trouble with their bond auctions. Even though the Fed is buying a tremendous amount, they still have too much and the rates are going up. China's having that problem. All the countries of Europe, the so-called pigs, and even Germany, everyone's having problems. There's too much debt and not enough money. That's our problem. And so just issuing more debt doesn't fix it. Interest rates are going up. Brazil, India, and China are all raising rates on purpose in order to combat inflation. You have smart countries like Norway, Australia, and Canada that have raised rates in order to just proactively fight it. They're not seeing the vicious inflation that these emerging markets are, but they're being proactive, which is wise. Europe and U.S. are in a catch-22. If we raise rates, the economy is going to crumble. No question. We have a deflationary depression from that. But if we don't, inflation could get very severe. And so they're just hoping to kick the can down the road and hope it won't be so bad. Bill Gross, the smartest bond investor of all time, sees accelerating inflation. He's made his name and his fortune by being right on those kind of calls. So it's important to notice what he says. He sees accelerating inflation. The Fed changed the accounting rules so they can't become insolvent. The Fed, they have assets and they have liabilities just like anyone else, and they have a serious danger of becoming insolvent. If interest rates rise, that makes all these treasury bonds that they've been buying, it makes them worth less. And all of a sudden they start having huge losses on their books, plus all the crap, excuse my language, that they bought over the last couple of years. That stuff is not worth what they paid for it when they were buying all these mortgages and who knows what they bought. So the assets on the Fed's books are crumbling, and they could literally go be insolvent. But they've just changed an accounting rule. They hid this. They didn't announce this with a bullhorn. They just kind of hid it in their notes, that instead of, if they ever have a loss that doesn't work good on their books, they'll charge it to the Treasury. Therefore, they basically can't go under anymore. So it's a nice accounting trick. It's what Enron did, worked well for Enron. Now our Federal Reserve is doing that. So yay for us. The best way for China to fix their inflation, I think Peter Schiff made this comment recently, I thought I write it down, which is true. I've talked around this, but it's a good direct quote, even though I'm not quoting directly. The best way for China to fix their inflation is to let their currency rise. But this would mean massive instant U.S. inflation, because we buy so many goods from China. If they immediately all went up in price, that would just boomerang throughout the economy. We would all feel it instantly. That's the end of part 1. I'm going to jump in and do another video here, part 2 on inflation. Again, if you haven't seen the Coming Storm video, really, it's free. It's really important that you do that. Thank you. God bless you. Bye-bye.